With the market teetering around all-time highs, we just got some mind-blowing data in regards to what insiders are doing with their own company's stock. And you would think as the market continues to push higher that they would be continuing to buy. But they're actually doing the exact opposite in record numbers. In this week's video, we'll cover the returns from last week. We will dig into the Insider Transaction Ratio Index. And lastly, we'll wrap the video up and talk about the record-breaking housing market and give you our thoughts and opinions on that. Last week, the S&P 500 battled back and ended the week pretty much flat. Now, the NASDAQ and the Dow were both down about 0.5%, and the Russell was up about 0.4%, and the Russell continues to lead the way for the year here in the US, up over 15% year to date. Moving over to foreign and emerging, foreign stocks were down about 0.5%, and emerging was up 0.5%. But we're watching emerging markets closely because India makes up a big portion of emerging market returns. And India's coronavirus case numbers have exploded recently. So it's going to be very interesting to see how India can handle the increase in coronavirus cases while also continuing their industrial revolution. This week's chart of the week is going to be the Insider's Transaction Ratio. This ratio measures the buys to sells of insiders inside of a company. Now, before we get into the index, I do want to define what an insider is. So an insider is a senior officer or director of a publicly traded company, or it could be a person or entity that owns over 10% of the voting shares of a company. So long story short, it's somebody that knows the inner workings of a publicly traded company. Now, if you look over to the far right of this chart, you will see the red line spike up to over 133. Now, what this essentially is measuring is the amount of insiders selling their stock compared to the amount of insiders that are buying their stock. And that big spike up is the largest increase that we've ever seen. Historically speaking, anything over 20 to 1 is a bearish signal for the market. That red spike comes in at almost 140 to 1. So as the market continues to push and make all-time highs, insiders are exiting their company's stock position in record numbers. Now, we've been talking about some things that have been concerning underneath the surface of the market almost all year, and this certainly adds to the concern. Now, the topic of housing has become a hot topic, and rightfully so, as month over month we continue to set new records. And last month is no different. The median home price went up from $328,000 all the way up to $344,000 now. But we wanted to actually dig in to see what exactly is going on with the housing market. And this is really a supply issue. New home listings are down 45% from previous years. So there's just not a lot of houses on the market. And there's a couple reasons why. One, if you do want to list your home right now, well, you still need to find another home to purchase. So you're going to be paying an inflated amount there. Also, when you're actually looking for new homes, there's just not a lot of homes on the market. So it's just a vicious circle. And lastly, if you did want to try to build, well, that's not a great option either right now because the cost of building is through the roof as well because the price of lumber is up, and also there are supply chain disruptions that are happening, causing projects to be pushed out even more. So you cannot get a project built, and also it costs almost 3 times more than what it would have cost last year at this time. Now, we've obviously been talking about inflation for the whole year as being a concern because we don't want the Fed to step in and raise interest rates or to start limiting the amount of credit or free cash flow that's going into the economy. But there is one thing that we could look at with the increase in housing prices that could be something bullish in the short term, and that is the amount of people that are now able to tap into equity in their home and use their home almost like an ATM to then go out and do not only home projects, but buy other things and stimulating the economy. And we all know that consumer spending is the backbone of the economy, and we could see some record consumer spending numbers over the next couple months. Thanks for watching, and if you're on YouTube, make sure you subscribe to our channel, and if you're on Facebook, follow us there as well. This was Matt Fox from Perspective Wealth Planning with what you need to know about the markets in 5 minutes or less.